Hello traders, and welcome back to another video here on the Learn to Trade channel. And this week's webinar, we are going to look into a lot of currency pairs and a lot of possible plays. Today we're going to look at our daily watch list for the week. Remember that we have 1 day of trading left, 1.5 days, no, 2.5 days of trading left in the week. So be careful with that. Volatility is still in the market though. And we're going to start by looking at the pound pairs, right? The EURGBP, the GBP Japanese yen. This long on the GBP Japanese yen did not get triggered. The GBPUSD, right? Then we're going to go look at gold. Huge winner in gold. We took profits. Now we are still inside of this structure in gold, which we are going to be looking at in a moment. But let's start with the New Zealand dollar versus with the euro versus the GBP, right? The euro GBP, it's pretty clear that we bounced from this zone that we were actually attacking from earlier this month right here. Now, let's use the correct templates on the levels right here. I'm actually starting to use the blue one. I like it better. It's more powerful to see. So the exact zone of the Euro GBP was this one right here, right? Big zone of support, but I mean we could go all the way to. We could start with a midterm or a mid-range level right here, and then just use the bottom of that first move as the right here at the bottom of the range. So this was a big range for the Euro GBP. It's about a 60 pip range, and this is the 2-hour chart on it, right? Now, what we do here, if you don't know, what we do here is that we go from the higher time frames, and then we go down to the lower time frames to far better entries, right? Right here we had a very nasty bullish trap. I'm sorry, but if you look closely, let's look closely. Actually, if you look closely at this bullish trap, I mean, it was clear that it was a bullish trap since we didn't quite hit that level, right? The lows right here were the exact level where we wanted to go long, right here. These are the lows. The reason that we wanted the lows to get hit is because this is where buyers were positioned, right? In the past. This is where buyers were positioned in the past, and it's very plausible that buyers are going to be positioned here. So this was a clear bull trap bulls got slaughtered in. And right here, when this pattern formed, this was the opportunity to buy the euro versus the GBP. We didn't do that because, as you can see, this was before Christmas, and we did not trade during Christmas Day or during the 27th. Because we were off, so we didn't trade this move, right? But what can we expect here, right? Where is the GBP, Euro GBP going? Because since the one thing that I want you to know is that there is no FOMO in trading. There should be no FOMO in trading. Yeah, I mean we missed the first leg of the move, but we are definitely jumping back on the second leg of the move, right? So what is going on here with the GBP, the Euro GBP? Right, we have another mid-range. We have another mid-range. Let's use the correct colors too. Another mid-range level or key level right here. After the Euro GBP bounced from this mid-range level, we went and we are retesting the other mid-range level, which is the next key level. In fact. So we have gone from low to high about 138 pips. So what can happen here? I mean, we are definitely not looking to short the euro versus the GBP. Why? Because if we go to the 4-hour chart, let's go to the 4-hour chart, people, right? If we go to the 4-hour chart, even the daily chart, let's go to the daily chart, right? This is extremely bullish right here. This daily candle is extremely bullish. Okay, now. Since this candle is extremely bullish, we are looking to get in on the next bullish candle, right? So what can happen here is that we get a rejection candle right here, or that we get some sort of indecisive candle on the daily that will close above our mid level, then will create a intraday pattern for us to go long. I'll explain that further, right? But before we go any further, let's look at the current structure that we are trading inside of on the EURGBP, like this and like that, right here. So clearly a bullish structure on the EURGBP. It is a very choppy trade, and I understand that. I mean, just look at this daily pullback. This was super choppy, and then boom, we move to the upside. Let's have a look and let's see what level of correction this actually is on the if we are inside of the golden zone with this. And no, actually this is a deeper and an even deeper pullback to the 76.4, I reckon, exactly a 76.4 right here on that mid-range level, which this candle of rejection, this daily candle of rejection, gave us a nice bias or bullish bias on the EURGBP, right? This is technical based only. So let's go back to the 2-hour chart, and there you go, right there to that mid-range. Okay, so what to expect? So this is looking extremely bullish, right? So let's have a look at the immediate structure that we just broke with. I mean, I'm not even going to use a structure here because it's pretty clear that what we want here is just a retest of the previous highs, right? And this is not a mid-range level. This is exactly the top of the range. So what we're going to do, right, key levels. There you go. So what we're going to do here, I mean, just look at this, okay? Right. Well, where was I? What we're going to wait here is two things, right? Either we are going to break with this key level and then buy the retest for a great risk to reward ratio trade, or we are going to go again to retest these previous highs, lows, and this previous mid level. Let's use the correct template. Mid levels. I don't know. Here, right? I need to change my templates. I mean to delete them all. So two possible scenarios. Either we go here and we buy the retest, or price pulls back to this level and we buy the retest of the previous level. In any case, we are bullish here and bullish only. Yeah, I am not on my computer, so I do not have my account on, so I apologize for that, but that's fine. I mean, we are going to buy the EURGBP in any two cases, right? So that's the EURGBP, and in both scenarios, we are going to get a great risk to reward ratio at the retest. Of course, that we are going to put our stops below the previous lows. So to the first target, that gives us a nice 1 to 2.5, and to second target, a nice 1 to 4.80. Right? So that's a great trade on the EURGBP. Heads up to that for 100 pips or so. Right? The US dollar, Canadian dollar. Now the USD CAD was another that didn't get triggered. All right, so let's move on and let's look at what's going on. Right, so what we wanted here is to get involved in this bullish move, right? So we put our buy stops above these highs, and if you look closely, well, when we broke with these lows, we deleted our pending order. That's how we do things here, right? We use pending orders because we want to get involved in the market when we have, justification of our trade, right? So right now we're just trapped inside of a range on the USD CAD, right? Very, very, very rangy market right here. I don't want to get involved in this. This is a no trade zone for me, right? No, even though I would love to trade short the USD CAD if we manage to break with these lows. This would mean that we will have a I mean, this would have to be US dollar driven, meaning that we would have to see the US dollar dip further. And if we get this, we would get a nice risk to reward ratio to the next target right here. So this would give us this is one of the rare cases where we would actually be looking for shorts and longs, right? So this would give us a nice 1 to 3 risk to reward scenario. But if the USD CAD breaks with the highs, right? This is the no trade zone. If it breaks with the highs, we go to the 4-hour chart so we can have a better look at this. Yeah, I mean, if we break with the highs, which is a very, very, very important level. I mean, just look at this. This is a massive level. This is a massive, massive level that has been retested quite a while. Right, if we break with this level, which is the 129.40, right, I will be looking to go long right here. And, well, I mean, if you don't know, this is the end of a nice Elliott wave pattern or move. And the Elliott wave dictates that we are going to go higher from this. So it is plausible, or it's the more likely move, it would be a bullish move. Also, just by looking at these 4-hour candles, you can see that buyers are intensely putting their money in at these levels, right? So where are we going to be looking to get some profits on? Now, the next key level that I see, sorry about the templates, man. All right, this is an all account. The targets, the first targets would be this mess right here, and that would give us a long position, a nice 1 to 5 risk to reward scenario or so on a possible trade. Remember that we would be in fact breaking with we have broken with a long-term structure right here on the USD CAD, right? But there is even a larger term structure on the USD CAD that we need to follow, or that we need to be aware of right here. So let's have a look and let's clone this and let's see if we have an entire structure in play. And as you can see, we do have an entire structure in play on the US dollar Canadian dollar. So why don't we go ahead and let's have a look at what could be the next move on the USD CAD if we clone some patterns from the previous move. So if we clone this pattern, historic price action dictates that we might possibly go and retest the 131 right here. So just by looking at patterns, you know, I would be keen to buy in this currency pair. Even though we are in a very, very strong and have been since March in a very strong move to the downside on the US dollar CAD. We're talking about a minus 13.5% move since the March high. So that's I mean, I understand that this is a counter trend trade, but we are looking to get involved in the immediate trend. Again, to me, there is absolutely no trade whatsoever at this level. I need either a break of the 129.40, I'm sorry, or the 128.20, right? I'm actually going to go ahead and call this. For me, at least, I will only be looking to buy the US dollar Canadian dollar, not sell it. Right, so that's, let's have a look at the DXY. The DXY, the US dollar continues to get pummeled into lower and lower moves. Let's go ahead and let's look at the weekly on the the US dollar currency index. We are still hits up from the 89. No, that's the 88.92. So we are still looking for those lows right here. The U.S. I mean, the Donald Trump just signed the new relief bill, a 900 billion relief bill that's going to inject liquidity into the economy, so that is going to be bearish for the U.S. dollar on the long term. You already know that. The more currency is in circulation, the less valuable one single um, dollar is in this case, which of course we're talking about the U.S. dollar. So we're looking for U.S. dollar downside, right? And having said that, the Euro USD should be a buy. Let's go ahead and let's look at the hourly. I mean, you already know that the U.S. dollar versus the euro versus the U.S. dollar is not one of my favorite currency plays because both currencies are strong. So when I want to do or when I'm planning a play on the U.S. dollar, I'm not going to choose the Euro USD as my default currency to go to, or my default currency pair to go to. Why? Because it chops a lot in the sense that we have two strong currencies battling with each other. So the most or the strong, sorry, the stronger both currencies in a currency pair are, the less volatile that currency pair is going to be. And we are volatility hunters. We do not, I mean, more than being afraid of volatility, what we are is seeking volatility, right? So nothing on the Euro USD, absolutely anything on the Euro USD. Now the pound versus the US dollar bounced from the 136.30, 136.20, I'm sorry, and it's going down. Now, I haven't looked at the news on Brexit. I mean, we already know that Brexit deal was signed, etc. I mean, this move. I mean, we are in low volatility trading at the end of the year, so be careful with that. Right now, we are retesting these previous highs. I don't like anything at all here. This is the hourly chart. This is looking bearish to me. I mean, every time we have a mild pullback, price just gets pummeled down. So I wouldn't be keen on buying the GBP at this level from any currency on any pound pair. But what I would be looking for is actually just a small pullback to get involved in a short-term short, I reckon. Maybe. Let's go to the 50-minute chart. Let's see if we get some action here. Yeah, as I told you, I mean, this is a strong move. There's absolutely nothing to me to trade here. We are in a what I mean, if it looks like a flag and smells like a flag, is a flag, right? And we are flagging at the moment, as you can see here. Let's go ahead and let's change the template, right? And I mean, yeah, it's this is a continuation pattern at the bottom of that. Well, at the previous lows, which is a great way to short the pound. Actually, we are going to do so. We are going to short the pound. So this, I mean, if you have watched until now, there you go. Here is a free trade idea for you. What we're doing here is simple. We are shorting the pound when the key level breaks, and when this continuation pattern breaks. So we are going to put a sell stop at the bottom of the pattern and our stops at the highs of the pattern. The exact price levels are: the entry price is at 134.27. Stop loss is at 134.67, and our profit level is at 133.15. Right here, this is our trade for a 1 to 2.8 risk to reward ratio. This is a great trade idea. If we go back to the hourly, you can see that it's looking pretty bearish, right? So I'm going to go ahead and stop this weekly webinar here. Thank you for joining me, and I hope you had You had a great Christmas again, and I'll see you tomorrow on the next video. And if you watch the video until the end, well, congratulations, and here's your free trade. See you.